Hey, everybody. What's going on? Salon Dia Hammond here, affectionately known as Suhan Baby. We have made it to Friday, y'all. We have made it to Friday for the Lunch and Learn home buying process. I want to thank you guys for sticking it out with me for this week. Hopefully you have learned a whole lot. We have shared a lot of information. And I thank you guys for sharing the videos. I appreciate that. I'm going to log into Facebook because, as I said, for some reason I cannot see it on my phone when you guys are asking questions. So I'm going to go into the group real quick. Hey, Sheila, welcome. Welcome. I hope everybody is safe. There's a storm out there. We've been getting a lot of rain and wind. But I don't think it's going to be too bad for us. But you guys be safe out there. So this week we've covered a lot of different things, right? We've uncovered some myths. We've laid out the groundwork on what it takes to get you to the closing table and get funded and get your keys to your house. We talked about the different loan types: FHA, VA, USDA, jumbo loans, FHA 203K, conventional loans. We've talked about the credit score requirements. We've talked about not all lenders are the same. Some lenders may require a certain score for a certain loan. Some lenders may not. Just on yesterday, one of our team partners posted where he was able to get a veteran a VA loan with a 489 credit score. So now keep in mind, your credit score determines your rate, which determines how high or how low your mortgage payment is, of course. How much you're buying, the amount also determines how much your payment is. So we also talked about down payment assistance programs, and not all down payment assistance programs are alike. Some are totally grants where you don't have to pay them back. Some are based on your DTI, debt to income ratio. Some require you to have a higher interest rate to cover the down payment assistance program. Some you have to pay back at the same time that you're paying your loan. And then there are some that are forgivable. And then there are some that you pay back either when you sell your house, you refinance your house, or either you pay your mortgage off in full. You have to pay that down payment assistance program back. So not all down payment assistance programs are created equal. We talked about saving for your down payment, saving for your closing costs. Down payments can be anywhere from 3% to 10% of the purchase price of the home. Closing costs can be anywhere between 3 to 5% of the purchase price for your home. We talked about how sellers can help you with seller concessions, which can help with paying some of your closing costs. We also talked about how you can get gifts, a gift from a family member or a friend. It just has to be documented. Cannot be cash. It has to be documented, meaning we have to see it leave that person's account, go into your account, and then a gift letter can be written stating that they've given you $10,000 as a gift to purchase your home. What else did we talk about? We talked about how extremely important a budget is, how important it is to track every dollar, know where every dollar is going. Because if you cannot track what's coming in and what's going out, you definitely don't know what you have used your money on. So if you want to find out what's important to somebody, look at what they're using their money on. So establishing a budget, knowing how much of a mortgage note that you can afford in the first place. Most people say, I want to go buy a house, but they haven't taken the time to sit down and say, hey, I want to dedicate $1,500 a month to mortgage, insurance, and taxes. And if you haven't sat down and did a budget to see what you can truly afford, you're not really ready to buy a house, because the last thing we want is for that home to foreclose and you be homeless, or you could be staying with family and now your credit is impaired. All right? So it's extremely important to establish a budget. It's extremely important to become disciplined and persistent with your savings. One of the things I told you is pay yourself first. That is the golden rule when it comes to savings and investments. Pay yourself first. You should be the most important person in the world to yourself, and so you should pay yourself first. Cut out unnecessary spending. You are in the process of buying a house, okay? So therefore, sacrifices may have to be made. You may have to tell little Johnny, no, we can't go to the movies this weekend. No, we can't go to Chuck E. Cheese. No, we can't go to CC's Pizza, because mommy and daddy are saving to purchase our home. Believe it or not, home ownership is what leads to the majority of wealth in this country. Your home can become your bank if you buy smart and you do it the right way. All right. There are people who refinance and pull out thousands of dollars out of their home to either start a business, to pay off high interest debt, or to send a child to college, or to do whatever it is that they want to do. And they're able to do that because of a home. So even if they don't refinance it, for some reason they want to downsize and sell that house or upgrade, sell the house and upgrade. If you buy right, buy in a great area and it's appreciating, you will tend to make more money with that house. There are people who are making, their home is appreciating $28,000 to $100,000 a year. So what does that mean? You buy a house for $100,000 in certain areas. A year later, from the time you purchase, your home could be worth $128,000 or $200,000. So there's something to think about. We talked about credit, how it is extremely important for you to pull your credit report. Check your credit, right? Check your credit report. Keep up with your savings account. Keep up with it, keep up with it, keep up with it. You can go to annualcreditreporting.com, pull a free credit report for all three major credit bureaus, Experian, TransUnion, and Equifax. So it is important that you do that. If you have negative items on there and they're inaccurate, you can dispute those items. You can do that by phone. You can do that by sending a letter to the three credit bureaus, or you can email all three other credit bureaus, okay? If you have negative items on your credit report that's 7 years and or older, please dispute those ASAP. Dispute those ASAP, because after 7 years, you are no longer liable for those debts on your credit report. It's considered wiped out. You get a new slate. You start over. So now here's the thing. Most credit bureaus, TransUnion, Equifax, and Experian, they're not going to delete those negative items even after 7 years have passed. It's going to take you contacting them. You can Google their information. When you Google Experian, TransUnion, and Equifax, you'll be able to get their address, their phone numbers, and their emails. So have at it. Tell them, hey, it's been 7 years. I'd like to have it disputed. You can do that on the phone. That stuff happens quickly. Typically in 2 to 3 days, your report is updated, just like that. All right. We talked about how if you have collections on your report, if the collections are $2,000 or less, it typically does not impact your decision to get a mortgage. If you have a charge off, that some lenders overlook those charge offs. So now we don't necessarily want all those negative things on there, right? But I'm just letting you know that if you have a little bit of impairment with your credit, the lenders I work with, they tend to work with people. All right, we talked about the types of, we already talked about the types of loans, the VA loans, the USDA loans, the jumbo loans, the conventional loans, the FHA loans. FHA is not for first-time home buyer. It is the Federal Housing Administration established to give loans that's backed by the government to people who may have less than perfect credit or who may not have enough money for a down payment. So it allows you to put down less money, and it allows you to still be able to buy a beautiful home if you do not have perfect credit. What else did we talk about this week, guys? We talked about a whole lot. If you missed our lunch and learns here in the group, buying and refinancing in South Carolina, buying and refinancing homes in South Carolina, go back in the group and watch the video. We were live Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and we were covering different topics. And I think probably the most important one we covered was the first day when we talked about mindset and savings, because you definitely have to have the right mindset when purchasing a house. You have to have the right mindset when doing anything. But what I want you to do is educate yourself on the home buying process. I want you to have patience on the home buying process. If you educate yourself and if you prepare yourself mentally and financially, and if you align with the right partners, i.e. a realtor and a great lender, your home buying process should not be challenging. It can be easy peasy. Probably the most difficult thing will be to find a home. But once you've found a home and you've got a great realtor who can negotiate on your behalf, And that realtor and the lender are connected and communicating, the entire process should be smooth sailing. That and the attorney. The attorney should be someone who can move quickly and someone who is accurate, and you should be able to get into your home with no issues because you've already prepared yourself mentally. You have the finances that you need. Your credit is good to go. You've been pre-approved, and now, boom, we're making it happen. So at this time, I'm going to pause, and I'm going to see if there are any questions that you may have in the group. Let's see. Any questions? And if you're watching this on the replay, if you have a question, simply just type it below, and I'll be more than happy to assist you. Doesn't look like we have any questions. I see some of you are on here watching, and I appreciate that. I've had fun this week doing this Lunch and Learn. If you would like a free home buying process PDF file and a video, you can go to loanswithsuham.com and you will be able to download the video and the PDF file, loanswithsuham.com. All right, I want to thank you guys for watching. Please share the videos. We want to help empower people to get into homes. It is not too late to get into a home right now in 2024. If you're wondering how long the process takes to get into a home loan, go back and rewatch the video in the group, Buying and Refinancing Homes in South Carolina. If you are working with a stellar team, you could actually get into your home within 30 days. But hey, that involves working with a stellar team, finding the home that you want, moving quickly. Sometimes there are bumps in the roads, and it can take 45 days to 60 days to close on a home loan. So thank you guys for being here. I'm Solandia Hammond, aka Suham Baby, with loanswithsuham.com.